Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now the markets have really settled down. They're almost back to where they were before the whole Liberation Day, right? Where Trump announced the tariffs. We had everyone across the globe kicking and screaming. US Treasury yields were getting hammered. Equity markets were down 15%. Then he reverses everything, and we're almost back to where we were. So what we've got now is a situation where looks like the overall tariffs will be 10% across the board. China, the odd one out. Uh, you think some of the Asian countries with low labor costs might have higher tariffs just to try and balance out the manufacturing sort of industries, all that sort of stuff. But what is happening, and we want sort of calm here, right? We want everyone to be not necessarily happy. There's always going to be countries who are disappointed, but we want the two big superpowers, China and the US, to calm down. It looks like they're sort of kicking things off a bit more, right? National security. China are closing out a lot of US companies, and so is the US doing the reverse to China. So let's see how that plays out because that could interrupt the general flow of the markets for us, right? The Now let's just have a look here. What's going on in the markets? Let me just move the live trade up for a second. Now, Nasdaq closed up 2%, almost 2% end of the week. Now, we do have a bit of a risk on profile. Equities at the moment, it's like, yeah, breath of fresh air. Normal markets, up 0.2, 0.4%, 1% for the NASDAQ E-minis. So not crazy stuff. We are seeing some of the treasuries move around a bit. They are up overall, right? So anyway, you'd think you'd see a strong dollar there. It's not, right? Whatever's happening in the bond market is not happening in the currencies. We've got a risk on profile, Euro, Sterling, Aussie, Kiwi up, and the dollar pair's down, right? Nice, calm structure to start the week. Now, I want to see this sort of calm structure as we go through the European and North American session on Monday. And if it remains calm, then it's time to come back into the markets. Now, if I just give you a look at the charts, right? The hourly charts are a little bit, well, there's some crazy moves here, right? Seriously crazy. 500 points on euro. Like that's out of control. Sterling is up, what, 400. Aussie's the one that hasn't moved too far. And the Kiwis up, had a real good run to the top side there as well. And overall, we're getting dollar bearishness across the board. Not easy trading dollar Swiss or dollar yen as well, but and dollar CAD to the downside. So we've got uniformity. Now, if we didn't have all these tariffs going on, I'd be saying, listen, guys, let's just crank it up because we do have good trading conditions. At the moment, because of all those crazy moves last week, come back and check your daily charts, right? I don't think it's over yet because China haven't really come back with anything solid. We've seen a breakdown here in the dollar, okay? A dollar index, dollar Swiss, dollar yen. It is sitting at a support trend line here at the moment. Dollar CAD's drifting lower, right? But support trend line another 150 odd points below. Euros cracked through the top side. Sterling's got resistance above. Aussie hitting another resistance level there. And not too dissimilar for the Kiwi, right? So there's things happening. Does the dollar continue to the downside is the big question, right? I'm not exactly sure. To me, all we've done is a massive flush out of some of these big portfolios, and we're back to where we were. Do we buy dollars or do we sell dollars? Right? That's the $1 million question. Right now, I'm sort of still waiting to see. I think there's better trades, right, on the crosses, right? And this is, if I just bring you back to the live trade hub, this is what I'll be focusing on as we go in this week's live coaching session, Monday, 8 p.m. New York, right? Really looking at the crosses and trying to pick them off in regards, the disparity, especially with the safe havens, right? You get massive distortions in some of these moves. Like the Aussie for the month is up 0.8% and 1.78% for the year. Then you look at the euro and you think, what's going on over there? It's up 10% for the year, for over 5% for the month, right? So that is just crazy. Same with sterling, right? So something's got to give here. Now, I know Aussie and Kiwi have still got China sort of bubbling away, but even the flightless bird, the Kiwi's up 4.5% for the year, 2.8% for the month. So there's a lot of carnage. I think there's opportunity here on the Aussie crosses. And then you come down to obviously the safe haven trades there, the yen and the Swiss. right? There's some good trades in amongst that as well. But I'll cover that on Monday, 8 p.m. New York, because there is some definitely some opportunities there. Now let's just come back into the live trade hub. There's plenty going on this week, right? The currency's in the zone. Right at the moment, sterling CAD is in a buy zone on the daily charts, and the Euro Swiss is at a sell in the sell zone on the hourly chart. So worth checking that out as we go forward. And this week, right, we've got a lot of things going on. This is probably one of the best looking weeks in well, it's April, so almost this year, I would say, right? And except for, and like the tariffs, we're just sort of coming out. The dust is starting to settle, so potential across the board. UK, Canada, we've got a few things going on. Let me just run through that. Now, Tuesday, UK unemployment figures. Tuesday afterwards, we got the Canadian inflation numbers. Now, this goes hand in hand with the Bank of Canada rate decision on Wednesday. Now, it's a 60% factored in, a 0.25% cut, right? Taking rates to 2.5%. So 60% factored in, that's 40% chance of a cut, right? So if we get a weaker number on the Canadian inflation numbers, that's going to lead us to the next move the next day, or the possibility of it. And that could lead us to a weaker CAD, right? So not a bad one to look at the start of the week, the Canadian inflation numbers. Then you've got, as we crank up into the week, now we should start to really see some calmness by Wednesday, I'm hoping. UK inflation numbers, right? Then followed by the US retail sales. Obviously, we've got the Bank of Canada there in between. And then you've got the Kiwi inflation numbers there afterwards. So, like high impacting directional numbers coming out all week. Got the Aussie employment numbers. We've got the ECB rate decision. Now, I've put this in here just to show you where it is, but the 0.25% cut is 99.8% factored in. So that's a non-event, right? But what is an event is the press conference, which is half an hour later, and you got the Philly Fed Manufacturing Index in there as well. This is a good historical number that gives a good reflection of what's going on across the US manufacturing and general economic conditions, right? So Thursday is going to be very interesting. That should be JP. We got the Japanese inflation numbers on Friday. Now that the yen is moving around, there's a lot of talk about inflation rate changes, hikes in Japan. It's time to start switching on to those fundamental numbers, right? So that's where we are on those particular on the calendar. As I said, the live coaching session, trading the crosses. Excuse me. UK inflation rate is the key live trading event, sort of Wednesday, and that's more so because I think by Wednesday we will see calmer conditions. Right? Maybe I'm being a bit optimistic about Trump not saying too much, but that's where we are there. And the prime time analysis, have I got that operational? No, it's not loading. I can't show you the nuts and bolts of that. I'll do that during the week. Now, so that's where we are, guys. It's I wouldn't say business as usual. What we do have is we've got like a nice calm market to start the week. This will calm everyone down, right? The fact that the equity markets are okay, the dust has settled. We're slightly up. That's good. The bonds, US bonds, have calmed down somewhat after a massive, the yields heading back up. Once again, we've got a bit of a risk-on profile on the currencies. You got the yen being the odd one out. The yen is sort of rallying at the moment. The Swissy giving up some grounds. So we'll try and make odds and ends of it. I would be sort of giving, like today, at least through the European session, let things calm down before you rush straight back in. It's a little bit, once bitten, twice shy situation. And just like coming back to the currencies, just a bit of a note, looking at these instruments, and I had quite a few traders sort of saying, hey, listen, are you going to be sort of trading and getting involved? No, not at this point, right? These moves are massive because there was very little liquidity and because no one knew what was going on. They were just running, right, against what had been happening the sort of week before. And if I show you sterling, right, this is a good example of where you have to understand, like in the banks, when they see extreme risk, coming down from the head of the bank through all the senior managers, they would be like cut all risk, like really reduce the risk. We don't want any major problems here, right? And that's what happens. So you're sort of trained to recognize extreme risk, and then you sort of pull out, sit back, let the thing bash itself up, and then work it out from there. So if you look at like the 3rd of April, right, the start of April, I think that's when Trumpy was coming out Liberation Day. You see this massive move in sterling, 500 points down. We're almost back to where we were at the start. This is where everything, you think, oh, yeah, I'll get long sterling. It's like, whoa, hold back a second. We're back to just where we were. The markets have just corrected somewhat, right? So let's not get too carried away. There's like the move has actually happened. Did we expect that? No, because we can't tell what Trump's going to say or what the flow-on effect is from what Trump says on the bonds. Well, we sort of saw that afterwards, but the volatility was so crazy. You can't realistically think, oh, I should have made 100 grand there, right? The smart play is wait for it to settle, then come back when there's a lower risk profile in the market, right? So don't feel like you missed out. If anything, you should be feeling good about yourself. I didn't do any trades at all last week. I almost got into a couple, and like I was looking at the Aussie in particular, right? Because of the Chinese situation, I'm like, well, Trump's doing a backflip on tariffs, but he's really keeping the ones on China. So I almost sold Aussie here at sort of 61.50. I saw it about 20 points lower, and I was sort of half kicking myself thinking, wow, you know what? I've missed an opportunity here. That was crazy. But then within like hours, it was massively high. And I'm sitting back going, yeah, you made the right choice. Like switch off. Like this is not easy. The volatility around this, where there's no trend lines in play, nothing going on, is extreme, right? So if anyone's telling you that's the time to be trading, they are sort of on a one-way mission to destroy their account, because that's, one bad move or even the volatility in amongst that before the move finishes, you're flushed out of the trade, and then you're wondering, hey, why was I trading that? Right. So don't feel like you've missed anything. And you know what? That was the sort of first week of the restart for the challenge. I'm not bothered at all, not doing any trades. In actual fact, we can start to pick things off from here, and that's what you've got to be thinking of, right? So let last week go. Let's look at the market. Let's get it lining up, and let's start to sort of shoot the lights out of it, right? This is where we are. And as I said, the secret to this week, because we have got a gorgeous week of fundamentals, is really keeping a close eye on China and Trump. If we can isolate the fact that most of the other countries are out of the way, that frees us up to be trading the crosses on those ones, or the dollar on those. What is really in the firing line is probably Aussie and Kiwi in particular. That's where things may change. Now, will he come back and do a deal with China? I don't know. But the Chinese are jumping up and down like they're fighting to the death, right? Which is a little bit crazy when you're talking like to the death in the financial markets. All right, guys, have a good one. All the best. Cheerio.